Salesforce reported earnings recently and the stock plunged 20%. Shares have recovered slightly since then, but they're still down 26% from the peak. At the latest price, Salesforce has a market cap of $228 billion, with $17 billion of cash and investments on its balance sheet and $9 billion of debt. The company's enterprise value is just under $220 billion. Revenue over the last 12 months comes to $35.7 billion, with $5.5 billion of net income and $11.3 billion of free cash flow. So Salesforce stock is now valued at 42 times earnings and 19 times free cash flow. That valuation may seem high, but it is in fact the lowest the company has traded at since its IPO. And that's because since it went public, Salesforce has been one of the best stocks in the market. Revenue has compounded steadily, and for more than 17 years, Salesforce didn't miss a single Wall Street estimate. Between 2004 and the end of 2021, the stock produced annualized returns of almost 30%. However, last month's earnings were the first time the company has missed estimates for revenue growth since 2006. Sales grew just 11%, and guidance looks even worse. Revenue for the full year is expected to grow just 8 or 9%. So the key question for investors is whether this business is as good going forward as it has been in the past. Investors have been selling software stocks lately for a couple of reasons. First, generative AI makes it easier for anyone to develop new software. As a result, the cost of software development should go down, and the value of software companies presumably follows. Second, Salesforce subscriptions are seat-based, which means subscription revenue depends on the number of users within an organization. If generative AI transforms sales and marketing teams, the number of seats using software products likely drops, and we are already seeing layoffs increase across the technology sector. It's possible that Salesforce moves away from seat-based pricing to more of a consumption-based model, but it remains to be seen whether that model will be as profitable, and that's a key issue that investors need to consider before purchasing Salesforce stock. Of course, Salesforce is adding its own AI technology and believes AI will be a net positive, delivering more value and ultimately higher pricing. Acquisitions of Slack and Tableau can benefit from new AI models. So there's little chance of Salesforce's earnings falling off a cliff. If that's the case, then an investment in Salesforce can work. A simple discounted cash flow model that assumes 15% revenue growth and 22% free cash flow margins for 10 years with a discount rate of 10% indicates an expected return of about 12.1%. So Salesforce stock is getting attractive at the current valuation. However, until we see signs of growth returning, it may be better to stay on the sidelines for now. But these are my personal opinions, not financial advice, and I hold no position in Salesforce stock. For more investing videos, make sure to join my newsletter at 3minutebreakdowns.com. Thank you for watching.